disruption, whether it's really disruption or it's actually more collaboration, and what exactly they're doing on the fintech space, regardless of how you define yourself to be, whether you're a fintech with a small t or fintech with a capital T type of company. All right? I'll go to Jim from Gear Power first. Talk about what your fintech proposition is and how you're starting to collaborate.
Okay. I won't go through the presentation because the topic that you just set out is very specific, and I'll answer it. Yes. So for us, we're Peer Power. Some of you have met before. We are a SME loan marketplace, meaning we match SME borrowers with investors. One thing I wanted to go back to on the first panel, I think when Brendan was saying that there is no true P2P in Thailand, and to a certain extent he's right, because true P2P by definition is from retail up to retail borrowers, retail investors to retail borrowers. We don't have that in Thailand. We serve SME loans at the moment. And also maybe referencing the first panel, Khun Tipsada was saying, and maybe analogizing the legal framework and the laws of the square box. Very true. So we play inside the square box. And for us, our value proposition is really addressing the pain points of SME borrowers. Currently, if you're a bank or if you're a customer, banks normally are very well equipped to serve very large customers, right? The way they define SMEs is even, for some banks, any company below 100 million in revenue doesn't sort of come up on the radar, okay? On the other end of the spectrum, if you're consumers, let's say in the major cities in Thailand, you're quite well served. I mean, they have these apps, OnPay, QR code, etc., where everything is becoming free or virtually free. Now, you have a big gap in the middle, right? Aspiring entrepreneurs, people in service businesses, people who have been in business a few years, haven't quite yet reached that 100 million benchmark for some banks. And at the same time, they're drawing down on their personal credit to finance their businesses, especially the new generation businesses who are service firms. They do not have collateral. And banks are, well, a lot of banker friends say to me, the reason why this market is underserved, they don't deny it, but it's underserved because to a lot of banks, this segment is unprofitable, right? Now, but if you look at how consumer credit is granted, unsecured consumer credit, you don't necessarily look at his collateral base. You look at his earning power. You look at his capacity to pay. You look at his willingness to pay. Why shouldn't that be applied to SME owners and business owners who are currently, facing the same problems, albeit at a lower rate, because the guy has taken the effort and the time to corporatize himself, and we're penalizing him for it. That's sort of the market we serve. Second question on collaboration. On these structures, you have payments going from one side as a loan to the other, and repayments coming back. Obviously, we don't have a bank, so we utilize banking partners. So we have those partnerships, as well as information partners, where we're able to draw on the financial information of these SME borrowers. So yes, I think your slide about becoming, collaborative, ultra collaborative even, and platforms, that's sort of the future. Because I don't think anybody can do it all, nor should anybody try to do it all. Focus on what you're good at and utilize infrastructure already in place, already overbuilt.
Very good. I'll also have with Jay, who is our last minute entry to this panel. We really thank him for being a good sport on this. But yeah, there are several things that you need to talk about, your fintech proposition, but also your recent ICO.
Yep. Let me give a little bit of background on J Ventures. We are a CVC under JMart. As you may know, JMart is a mobile phone retailer. But we have 5 companies under JMart. One of that is Fintech, which started in 2015. The founder's vision is to make everybody lives easy for personal lending. Basically, he created J Ventures so that we can disrupt the traditional business models in our companies. So basically, the responsibility of J Ventures is to go and find other business models that would replace our traditional business models. As a part of venture capital, we also go do M&A with other startups. Last year we did M&A with Kunat, which is Deep Pocket. On the topic of collaboration, we actually see a rapid growth for pilot projects that we could expand it to be a next business for us. Last year we did DTAC plus Deep Pocket plus Fintech collaboration, which give out basically DTAC has the information, right? And basically Deep Pocket is the intermediary to let the customer keep the money. So Fintech is the party that is a source of fund to those DTAC customers. So we are basically giving out loans, digital loans for DTAC customers using credit scoring from the DTAC database. So we were able to apply those projects to create a platform for digital lending platform, and that's why we created ICO. The reason we did ICO is because one, we believe that blockchain is going to come in the future for sure. People say it's Internet 2.0. So we want to embrace the blockchain technology, and also we have seen many startups that does ICOs already in other countries, and so we have the business model. Plus, ICO is another way that we can raise funds, so why not just do it? So we created quite a controversy for the last few months, and we've been to many regulators, at least each of them like 3 times, SEC, BOT, Stocks Exchange in Thailand, all those regulators. So we are still in their box, and we are willing to comply everything we're going forward. The latest news is that we have to pay tax and VAT. So I raised 20 million something dollars, and 20% is that it's gone. But we're willing to comply, and we're willing to set the standards for Thai ICO.
We'll talk about ICOs in a bit, but can you give some context about the volume of loans, the number of loans that you were able to give out?
For the project, the DTAC project, we had a pilot test for 10 days. We broadcast out 500,000 customers. We were able to get an interest for about 13,000 customers, and we were able to give out loans to 2,000 people. And that's about 3 million baht, because all of the transactions are less than 3,000 baht. So we did that in over 10 days, which the normal lending process is usually takes up to like 2 weeks. So we were able to fasten the process, and we see that there's a huge potential for the future projects.
So we'll go and respond to that, but first, especially because you really have to look at how the fintechs are disrupting, but also moving faster than probably right. You eventually will have to defend the financial services industry. But Kumbanaron first to talk about your key initiatives and what around securities, especially around greater use of innovation. I think there are some slides we want to use.
Yeah. From the previous slide of Michael, I saw that saying the adoption of fintech is low somehow in Thailand. I would say no, at least in my industry. Just from the slide that I'm going to show you, it's all about VIB security business, trading business, investment. The first slide I would like to show you is all about the trading activity of people in the stock exchange of Thailand. More than about 50% is from retail investors. The rest is from the institutional investor, which coming from, this is for retail investor in blue. The green one is from foreign institutional investor. The rest is from local institutional and proprietary trading from security company. From this, you will see that a lot of participation is coming from mainly the retail investor and foreign investor. How the technology adoption in this area, let's show you in the next slide. The next slide, please. Next slide, this one is showing you about, this is the trading volume of retail investor. And this one is the proportion of the trading volume that's being done online, self-service trading or internet. So you see a clear trend, during the last like 7 years, 5 years or so, the clear trend that this thing has moving up. Right now, the internet volume is about nearly 80% of trading volume being done by individual investors like us. This is only for retail investor. The other one that I mentioned earlier is on foreign institutional investor. A lot of them trading through the so-called DMA, direct market access, which is doing, they're using the automated algorithm sending the order through broker to the stock exchange. So it's a real adoption of technology, less and less human involved in the process of doing trading. So this industry is being disrupted a lot already during 4 to 5 years. And this slide is showing you, this is about the total number of individual investors. Right here, the second chart is showing you, this is the portion of individual investors that trade through internet. So it's growing from like 40%, right now it's over 90%. Very few people that trading through dealer by using salespeople to execute the order for them. So it's quite clear that we, the player in the security business, need to adjust ourselves in accordance with this trend and the disruption to our business. So again, this one is showing you the interesting statistic that because the trading security online, you can do it through PC, right, Mac or whatever, or your mobile phone, iPad, and so on. 75% is coming from mobile device. So it's quite true that we all heard about mobile first in the past few years, and this is the real thing that everything that being done mostly on mobile device for the trading activity is business. So that's why all the players need to revamp ourselves, adjust ourselves, and doing the new thing, new innovation to become irrelevant in the industry that we are doing. Otherwise, our business could be gone easily. So Michael like me to mention about a few initiatives that we have done to, being ourselves prepared for this thing. Just a few examples that I would like to show you. Mostly for us, we are trying to be embracing the new Fintech thing already, trying to work with Fintech house or some player that coming to us. But then again, we at World Security, we have a team that we doing internal innovation, I think about 6 to 7 years already. The first thing that being done is that we doing the so-called program trading. I remember my experience last 6 years that program trading is prohibited. We are not allowed to provide this service to individual investors like us. So we work with our regulator that we have the capability to do this. So we would like to bring our resource to serve the client. And by doing that, we approach SEC, and they allow us to do so. So we are the first secure house in Thailand that offer this service to Thai people. So this thing is being done internally by our financial engineer. It's managing the fund of the client, emotional free, rule-based investing, and we try to put in any formula that to help them trade better. And so far it's been so good. That's the first innovation that we have done. The other thing would be on this last 2 years. When people investing in stock market, one of the things, the know-how that people believe is on so-called technical analysis. normally people will look at the chart and to decide which one is the bull trend, which one is the bad trend. With our team, again, we use our team to do the pattern recognition automatically in real-time manner. The machine will read the price chart and try to translate this thing into the trading strategy and convey this thing to clients. So our client, they have the knowledge. Right now, they don't have to do everything by themselves, pulling out the chart tools, trying to select which stock to buy, trying to read the signal. Everything is being screened and sending out to them, directly, even on their mobile phone. The other thing that I just launched last year is on the chatbot innovation. We just do this thing in Facebook and in our website because we have a lot of requests from clients. Normally, we issue the product called derivative warrant. The information about trading this option is on our website, but I think it's not the way to go anymore. Because it's slow, people need to go to the website to get information. So that's why we decided, why don't we do chatbot? That they just put in a few words of stock or the option that they would like to get the information, and then our chatbot, we use the API to retrieve the data and send it out to the client right away. We've done this last year, and I show you this interesting statistic. Because the trading of stock markets is about starting 10 p.m. to 12:30 in the morning session. So you see the dark blue here is where a lot of people, they talk with my chatbot, so-called Nong Bua, Sister Bua, because we in Thai we have volume security, right? So we have this chatbot to answer the question from the investor in real-time manner. So we retrieve everything in real time and send it back to the client. So as I said, we need to survive. So that's why we adopt ourselves a lot, trying to serve and make life easier for our clients.
You seem to be a fintech yourself, right? And now I think what is impressive from your story is that you do not necessarily have to get innovation from outside, but you actually develop these things.
Exactly. Because I think inside or outside doesn't matter. People might always say that you need to get fintech from outside. I'm not quite sure. It depends on the culture of your company, how the direction and how you like to do it. Because at least now we are trying to have an open discussion with the team, and we invest a lot with people. Financial engineer, I recruit them by myself.
So the bank is actually full of the challenges, as you know. The consumer behavior has changed. Everyone have the mobile, perhaps more. In particular, if the 5G happens, so I would assume there would be more mobiles or more internet connection. Another challenge is these guys unbundling the banking business. Everyone wants to be the bank, but they do not know yet what's going to happen. So the next one is actually the regulation side. So in the banking industry, we have over 5,000 or 7,000 policies that we have to follow. To get one project executed, it took me to go to at least 13 committee, 26 signatures to launch it. So yes, talk to me how to launch things in the bank, okay? The other thing is that the banking system, core banking, is super complex and is still running on the 30 or 40 years old technology. Definitely, we cannot run at your speed. So that would be another big problem of running the bank in this century. And another challenge would be on the revenues or the profit. As you notice, every day there will be more of the regulations, more of the pressure in terms of the fee cutting down, this and that. But in terms of the cost size, every day the cost will go up. We have IFRS, we have the cyber securities, we have other things. Every 2 or 3 years we have to upgrade the system again. So the cost size is going up. We cannot just eliminate branch by one day, but we have to deal with how we cope with the shutting down in terms of the fees and revenue. Last but not the least, the most important one is the cyber security one, because we do not know where it's going, when it's going to come, which form it's going to come, okay? That's the sad story of become a bank, working in the banking industry today. However, to survive, what we have to do is actually 2 things, very simple, on the digital transformation. You have to improve the customer experience, and the other one is to make sure that you improve productivity and efficiency. So everything we do right now to answer 2 things, improve customer experience and gain productivity and efficiency. And these are the, I wouldn't say it's the weakness of the bank, but it is true that we are running something that inefficient in these four things: payments, money transfer, wealth management, and lending. And that's why these people is on this stage, because we're not running it as efficient as we should. And these are the new things that's going to happen, and it's already happened in the banking industry. One, robo-advisor, pretty much like the algo trades and electronic trading. But we entering in the stage that whereby the young generation say, don't talk to me. If you were the IM, just give me some tool that I can manage my wealth. And in particular that we are getting to the aging society, this and that, and the wealth of the other generation will be transferred to another generation. So we are facing the technology disruption in terms of the aging in society as well. The second one is the blockchain. So we believe in the distributed DLT and decentralized process. So we are introducing and working seriously on the blockchain because we run the bank and the blockchain banking. And of course AI, the AI will help improve a lot of, we increase productivity and efficiency. And we use the AI in the service pretty much a lot, which is going to help bring down the cost for the bank. The eKYC thing, people talk about the national digital ID, that will be the future infrastructure of the industry that would help disrupt ourselves and actually going to help to onboard the customer in the most convenient way and the least cost for the entire industry. The mobile first, the open API that we should talk about. Last but not the least, the digital lendings. One, all of the information can be connected. The platform is ready, the API is ready. I think we will see a disruption in the lending business. And last but not the least, we're mapping it out, the readiness of the digital transformation on the context of Thailand. We look into this, the entire country. So whereby we have almost 90 million bank account, or perhaps around 75% of the population already have the bank account. We have a debit card around 51 million debit card, the credit card 21 million credit cards, and PopPay register over 40 million. The e-money account around 40 million registered. The mobile banking is 32 million. And again, I repeat it, this is going to create the disruption of critical mass because 5 years ago, the mobile banking user is only 1.5 million. And it's growing on the speed of 3 to 4% per month. So it's going to hit 40 million soon. That's going to create the mass, critical mass. And then internet banking, another 20, but stable. Mobile subscriber is only more than 91 million, smartphone 52. And we call it the internet infrastructure readiness, which is 50% only. So meaning that the Wi-Fi connection is not that widespread. The cost of the airtime is still high, but I believe that once we go to 5G, the infrastructure will be much cheaper, airtime will be lower. Social media user is more than 50 million. Thai people is crazy on this one. We have EDC, which is the electronic payment, 400,000. But last but not the least, the QR. But based on the Bank of Thailand governor, he already said that the number of the QR deployed is over 1 million already. So this in a nutshell, that somewhat Thailand is actually ready for the digital disruptions, and also the digital readiness will be somewhat in the stage that you're going to see a change, drastic change in the next 3 to 5 years. Okay.
Very good. So we'll have a fervent discussion, I think, hopefully, on the dynamics between your traditional players that are, to be honest, getting better at innovation, but also the disruptors that also want to still compete, right, in a very disruptive economy. Maybe we'll start with Jay here to talk about what you have learned, aside from your lessons in terms of regulatory meetings, about how difficult or how easy is it to be a fintech disruptor, quote unquote, in Thailand. Over the past 2 years, has it become easier?
First of all, I don't think it is easy to start. but you gotta start, or else you won't get anywhere. So we started with our own money, and when we started at first, we only had the information of our retail customers at Jmart, and we hired a professional from one of the non-banks and to run Fintech. We slowly study the patterns and the credit scoring ability for each customers. And from that, we build on our lending platform for now. And we are continuously developing our credit scoring. And also, we are trying to reduce our NPLs to the lowest as possible. But it is not easy. Yeah.
Have you taken a look at more partnerships with your banks who might have some more capabilities, but also maybe funding capabilities too? Or
yeah, we have funding from the banks. And on the collaboration point, we collaborate with a lot of startups. We do credit scoring with one of the startups. We also study the customers from the wallet, from the pocket. And also we are trying to implement the blockchain. So we are also partnering with a blockchain expert for our digital lending platform.
we'll have to respond. I think you're about ready to talk about.
People
this.
talk a lot about the peer-to-peer lendings or digital lendings, but I would like to echo this one. Because we're also running the largest personal loan credit card in Thailand, and also the chairman of the credit card clubs as well, so I have to be politically correct on this one. Lending is not easy. Lending money to other persons, everyone can lend it, but not everyone can get the money back. So we have to be cautious on this one, on why we should gradually improve how we lending to the people. But there will be someone who do not know or do not have the cautious enough to get the loans or to manage the monies, or I would say have the financial education. Sometimes you can overlend the person. However, yes, there will be some sort of the what we call as some part of the industry is not efficient as our colleagues is saying that we're not having the good platforms or the way that we can actually lending to the right people at the right price. So right now there's a lot of things that's still going on this one, but soon I think we will have the efficient platforms and technology that will be able to improve the financial inclusion in all aspects of the customer.
So it does seem, I think, whether it's Peer Power, the Jmart initiative on payments, it's all about the models, right, and the algorithms that you maintain to really look at propensity to default, but also the ability of the customer to repay. I mean, this should probably be the battle of the future, right?
The algorithm is one thing, the accuracy of the algorithm will help. But in my past experience, once you lend the people, the loss is not actually occur right away, because the peak loss will happen around 36 to 48 months down the road. Meaning that when you give the money out today, you do not know, because the loss peak is actually later on. But the algorithm is based on the historical experience. But yes, the technology will help in terms of where they go, what the mobile number that they call, whether or not the email they read, they have a lot of missed calls. So there's other things that can help us improve in terms of how we can lend to the people at the right time.
Yes, sure. I think with Jim, as you look at your peer power capabilities, right, your algorithms being a key component of your strategy moving forward, what are you focusing on as your key strength?
The algorithm, or I guess in sort of our case, is the credit scorecard, right? Is when we look at what our core strengths are, we look at the risk management experience of our team that we bring, understanding sort of the key factors that drive the ability and willingness to pay. So one thing which is kind of funny because it's almost full circle. I started work of years ago on securitized products. That's the point sound. Slicing and dicing credit card portfolios and on-sell them, the credit card securitized. And basically, one of my first jobs is to look at the credit scoring model. What happened 20 years later is the credit scorecard is still pretty much the same. The factors may have changed with the times. Again, every time you do back testing and all of that. So, for us, the capability, that's already an old capability. I mean, what we're trying to do is marry that with new capabilities about understanding the dynamic nature of information, because this is where I think a lot of, fintechs, financial institutions, you call it, the easiest loan to give out, I think, are secured loans, right? Take a low enough LTV, you have enough of strong credit collection, you're in business. It's harder, like Tarkan said, to lend out based on credit worthiness. So I think the capability is not throwing sort of the old and just use the new. Because one thing that we didn't quite believe in was to lend just based on, let's say, social scoring, for example. So some of the factors that we use are still very traditional. Debt to income ratio, debt to cash, cash flow coverage, but also understanding that SMEs in Thailand and probably elsewhere in Southeast Asia are not true corporate entities. SMEs have a very thin corporate veil, meaning that the ability and willingness of the SMEs, you look not only at the business, how it's performing, but you look at the major shareholders, the people making decisions about cash inflows and outflows. Do they have the ability and willingness to pay? And I think that's sort of looking at different levels, but also taking into account the more dynamic factors of information. So trying to marry what works, with what could work, to be honest, because it's an ongoing experimentation.
But ultimately, you want to participate in platforms that might already be created by the banks themselves, right? And be able to look at your scorecards and offer that as a service, or maybe as a white label type of product from you to the other banks. Is that the direction that you are taking now?
Well, for us, I mean, the way we've talked to sort of potential banking partners, etc. I've probably talked to all of the top 10 banks. The ones that are more keen to work with us are, not surprisingly, not in the top 5. So those people we've signed up with. Again, why? Because I think they have less to lose. They have less of a legacy issue, and they're more willing to experiment. So, whether it be on, custody of funds, whether it be on things like sharing information, a bank may be strong in retail, but they need help with some of their SME customers, for example. Those are the types of things that, we see happening more and more. And over time, one thing which, as any small business owner would tell you, you can't stand still, right? And just because today your revenue stream is one thing, doesn't mean a year from now, you just keep on to that without offering additional ones which make sense to your customers. Like I said, the corporate veil is very thin, so not only does the SMEs evolve, the business owners themselves evolve. And what else can we do with them?
Sure. And I think Kun Banarong will address this. Is that a fair comment? The big players are not quite open to speak to the fintechs or the disruptors, mainly because you already have capabilities that they might already have. Can you just explain whether that's true for you?
We haven't talked to Wall on
Okay.
Talk to back on that.
Okay.
I think at least for organization like us, we're quite open to do things. Anything good for our client, we will look to find a way to do it. Like the few of the innovation that I just showed to the audience here, some of that being offered by some vendor or fintech company, but they didn't respond to what we request or what we would like to deliver to our client. Like the example is like pattern recognition, that thing. It's quite important for client to see everything in real time. But the fintech, they say they cannot do it in real time. That's why we need to decide to adopt that. Why don't we do it by ourselves? That's very little example. So I think it's normally everyone would like to deliver the best thing to their client. Could be either in-house model or partnership or joint provided by fintech. I think it depends on the strategy of each organization.
But you still think that you're better than any other alternatives out there?
Not sure, but we are trying to.
All right. We'll open the floor to questions. I think that we'll take one or two from the floor. Yes. Michael.
My question is for AMCHAM. My name is Michael and I'm from Office Express. It's a supply big company started from Myanmar, and we are just launching here in Thailand and also moving to South India and Korea and Vietnam. We are in a process of raising money, and many people have come to us and gave us an idea why don't we raise with a coin offering. Now, because you have done a coin offering, and Michael also told me to put this question to you. Number one is the cost to go through. It's a good idea for us. We are a very small company, just a startup. Number one, it's a good idea for us to have a coin offering for our customers. This solves two problem issues. Well, number one is we don't have to give credit to the customers. We can actually buy coins and so, we get the money first. So number two is it expensive? Number three, let's say we are headquartered in Hong Kong, so we are going to move to Singapore. As Mr. Nasrul said, to do it in Thailand, it's a lot of issues, and you're also facing a lot of issues. Is it a good idea to have it in Singapore, or these are some questions?
Depending on where you raised, I think it's totally up to you. Omisego raised their ICO in Switzerland. One of the ICO that's upcoming is Tuk Pass. They're raising their ICO in Hong Kong. Since we're a listed company, we have to follow the regulations anyway. So we want to keep everything in Thailand. So that's the decision we make. During the process, we faced some issues. At some point, we thought that whether you find your coin attractive or not, it also depends on your business model. Each coin has a different purpose. Bitcoin wants to be a currency. Ethereum wants to be a platform. Each coin has its different characteristics. So it depends on your business model. Let's say if you're building a condo and you want to raise money through ICO, where's the coin is going to go into that ecosystem? So it's all about the model that you're trying to build.
You should see this ICO phenomenon with great interest, right? That would probably be a competitor, maybe like some weird mixture between competitor and opportunity. How do you see this?
Firstly, let me say I have an investment banking background, so I've done a lot of IPO, M&A, and so on. So ICO is a new concept for us also. It could be a new trend or not. I think for me, at least personally, it's yet to be seen. Because the most important thing, I think it's not about fundraising. It's all about the business that you raise a fund will be sustainable or not, will be beneficial to the economy, to the customer or not. I think that's yet to be seen because of the new project that being raised by startup, either by ICO or VC. I discussed with a few fintech companies, fintech startup that we become friends. We also know that sometimes some company that business model is quite difficult to survive. I think, of course, it is okay if it is private fund like VC and so on. But when you get involved with public money, it's quite interesting to be seen whether the successful one will be a good example for others to follow. But then again, I think it's really the new thing. And again, the level of detail and so on, I'm not in a position to give opinion on that because I read a few white paper of a few projects. Of course, it cannot compare with the normal prospectus of IPO, which is big and this level of detail and a lot of things have to be done. So different kind of thing to say that way.
also, to answer your question, one point to consider is also whether you're doing what the regulations allow you to or not. If, for example, if you say your customer can buy your office supplies with your points, will BOT allow you to do that? That's another point to consider.
I think it's a couple of days, Grab just announced that we launched the Grab Pay and Grab Financial. And because they only partner with the Great Saison, which is the Japanese firm on this one. So we see the trend. When the platform has scaled enough, has the huge customer base, and the models is fit with the market, then it's beyond imagination and creativity. You can connect with finance, you can connect with others, so it depends on the platform. Back to the Pay, sooner or later, they will be able to activate not just the financial, it could be insurance, it could be wealth management, it could be another thing. It's just beyond your creativity. It's just how you're going to use your customer base, your information or data that you have, and then open your app.
What will the role of a bank be? Not necessarily we'll see in this platform that is led by non-banks or non-financial institutions.
I guess, like you mentioned, running the bank is not that easy. In particular, in the industry or country whereby it's super or highly regulated. In Thailand, it's actually highly regulated industry and country. So by partnering is actually a good collaboration. Once we already have the license, we already gone through all these protocols, but then what we do not have, we do not have a good technology, we do not have a good platform, but perhaps the collaboration with the legacy like us would help leapfrogging or brings the innovations or product or project that you want to launch in the market quicker, much easier on this one. So I think it's better than to thinking about how we can collaborate with partners. On the other aspect, if your platform is good, the bank will invest in your platform.
Very good. One more question.
Banks have had, the challenges of technology and, the infrastructure. But you have the customers, they got the trust, of the population. On the other hand, you got the fintechs, kind of trying to change the world, but they don't have the trust or, we saw your graphic when, we are at about 7 in terms of the fintech bank, collaboration. What would it take to go to 9 or 10?
Okay. What will make us collaborate more? Aside from investing on that, of course.
If you recall, that when we designed the digital transformation strategy, we created 3 prongs. One is that the current stage, which we call is the improved stage, by using the fintech or the technology to improve efficiency at the current business models. The second stage is just to reform, or using the technology to come up with a new process. For example, Ripple, international money transfer. The third one is the disruptive stage, which is blockchains, open banking, intelligent banking, or other things. So these are the welcoming stage that we can embrace the technology from the fintech to work with the bank. Because we know that in every stage or in every day we have to move one step further. And without the technology, without the involvement of the fintech, we cannot walk or run fast enough. It's better to collaborate with the fintech to help us leapfrog in the innovation.
Sure. But I think for us as a fintech, the dream of open banking, that's definitely a big facilitator. The dream of open data, the dream of data sovereignty, where people actually, own that data and are able to give consent, so that eKYC works across all platforms, not just banks. It creates really, one of these very interesting scenarios where then our partners that you see aren't necessarily just banks and let's say, non-bank platforms or fintechs and bank platforms, but it goes across different industries. You know what I mean? So with an open banking platform, you really talk about the customer experience, the main interface. Underneath the interface, what is driven by, whose APIs is it? The customer doesn't care. Am I borrowing at the lowest rate, at the right time, with the right timing, and such that my payment schedules are flexible, and they understand my needs and are able to serve my needs. those are, I think, the questions of the future. And you know, if it's going in this direction of more openness and collaboration, it's exciting.
Key initiatives around collaboration, what do we expect in 2018?
Basically, for the digital lending platform that I'm doing, we need different aspects of technology to integrate into our platform. So we are looking for a lot of startups and technologies to collaborate with us and work with us in the future. Like credit scoring, we're already working with startups. We also need to do KYC. We also need to partner with some AI technologies, machine learning. Yeah.
Let's to Kun Leonard. We talked about some of the opportunities for collaboration. Blockchain was mentioned, open banking, intelligent banking, opportunities that technology can be a driver for greater collaboration. What technologies are these?
I think blockchain would be interesting thing, but then again, for my business, we are operating in a centralized environment, which is the exchange, stock exchange of Thailand. So it's not an isolation, things that we can do things on our own. That's the first thing. Second thing is about the regulation. We are regulated closely to the area of what we can do. But then again, I think on the regulatory side, I think they're quite open to new things. Like we're talking about the social trading that you can follow copy trading of someone else. This thing I talked to the SEC 3 years ago already, but going nowhere until now. So, so hopefully that new thing will be coming up, and we will be in a position that can work with any fintech or either by ourselves to deliver the better service to our clients.
Right. With that thought, I'd like to close this panel, but I'd also like to summarize the proceedings of the day, right? By just really talking about the certain truths that will always be true in the area of financial services and innovation. First, that we discovered regulation will always be slower than technology. Technology will move fast. Regulation will always, regardless of any forum, be a major point of contention and be blamed for the reason why we're slower than we should be. Secondly, that there will always be competition, right? Whether it's your banks that are competing with each other or banks competing with the new entrants, there will always be competition. But the third point, I think, is quite true in the last question, is that technology will mature very quickly, and these will provide us an opportunity to collaborate together as an industry to extend financial services to our customers. I thank you very much. The panelists obviously contributed a lot to this discussion on the truths of financial services. I thank you for your time, and thank Peter and AMCHAM for this opportunity.
It's really been a very interesting and enlightening morning, and I hope you'll take some of these ideas and go off and collaborate and innovate. Thanks again. We have a little gift for our speakers here.